All right, let me do a quick sound check here. Make sure we are cooking with gas, so to speak. And thanks, Darrell, for the intro. Yep. Okay, awesome. Hey, Lee. Hey, Derek. Derek, were you smart and did you pass on the golf? Hey, Kevin. Yes, very nice. Yeah, looked pretty. I heard it was quite intense. So pretty good. So, well, first of all, welcome everybody to tonight. And tonight's webinar is a little more informal because, it's kind of like this is for a webinar for folks that are already kind of familiar with some of the stuff that we do. I'll just kind of show you some of the stuff that I'm looking at here tonight. And I'm just doing a couple of futures trades and a few things like that. But what we'll be kind of getting to is just kind of going like, all right, if we're looking at this, what is all this up here and these little things and how does this just kind of help us navigate the current market that we're in? And really it's just kind of find a way to, as like anything, I mean, the markets, ideas beget more ideas, right? And as we're looking at the markets and trying to figure out the best way to kind of navigate them, a lot of times, depending on the circumstances, but especially right now, it really becomes incredibly important to just kind of submit our will to that of the market. And I'm going to talk more about that, but basically this is something that I've found that just kind of helps with that. So we'll just kind of dive into all of that. So let's get started on that. And yeah, I was going to look at the weather for Austin tomorrow. So we're doing, we're having kind of a mentorship here, or mastermind mentorship here in Austin this week. And we were originally hoping that when we scheduled this, that it would be warm in Austin because normally it is warm. But today it is 40 degrees, but there was still some golf being played. And if we look here, we can see that tonight it's going to be a low of 38. Tomorrow it gets to 49, and then on Friday it jumps back to 63 or so. But yeah, we've had this really crazy weather happening right now. A little bit of Murphy's Law, but of course makes it interesting. Okay, so this little thing right here, I'm gonna minimize that. Oops, let me see. I think I got it. Oh, there we go. Minus. Okay. All right. So we're going to talk about multi-10x bars on steroids. So is there anybody in here that does not have or is not familiar with the 10x bars? I'm making an assumption right now that you guys that are in here, you know what the 10x bars are. You're familiar with them. If you're not, that's okay. But the idea would be is that everybody in here already has the 10x bars. And if you don't, that's fine. I'll do a quick kind of a narrative on what they are. But tonight we're just kind of talk about like 10x bars and just kind of a few tools that you can combine them with that you might already have, and then also some stuff that Eric has done to kind of take them to the next level. And, for lack of a better term, what would the 10x bars look like if they were put on steroids? And can they help in this current market environment, right? So let's look at that. So first of all, welcome to everybody. I know I've probably missed a couple of languages in there, but hopefully that's a smattering of getting most everybody in there. That's something I should probably continue to add on. If there is a language in here that I'm missing and you would like me to include it the next time around, you can send me an email at john@simplertrading.com and I would be happy to do that. One of the things I learned about trading is when my first book came out, Mastering the Trade, in 2005. About that time, I don't know if I got hired or how that worked, but I started working with the Chicago Mercantile Exchange as a consultant, and for about 5 years, they would fly me to all around the world, Asia, Europe, and I got to meet with tons of different people, tons of different exchanges, all different countries. And what was great is when you sit there and you talk to traders, it doesn't matter where they're from, what their beliefs are. When it comes down to trading, people just want the ability to generate an income so they can, have more choices and feed their kids. And so that's something that I really look at trading as kind of this, it's a very human thing. Like all the borders and politics and all that falls away, because no matter where you're from or what your beliefs are or what you do, when it comes down to trading. And it's like we all kind of have the same goals. And so I've always, that was something that was just kind of surprising to me, where it's just like, yeah, blah, blah, blah. I believe all this kind of stuff. But now let's talk about how to make money. Like everybody's exactly the same. And I just always thought that was just awesome and fascinating and all that kind of stuff too. Yeah, Bob, I'm going to need a bigger slide for sure. So let's talk about trading. So trading, of course, is deceptively hard. What's interesting about trading is that when you first get into it, just like any profession, so if you want to be a doctor, if you want to be a lawyer, if you want to be an accountant, there's a path for that, right? There's a stair-stepping path. Those are probably the worst stairs that have ever been drawn, but there's a path for that. And it's one of those things is that the harder you work, or the harder that you study, typically the better that you're going to do, certainly for law or medicine or anything like that. And so when someone goes into trading, they mistakenly assume that there's the same thing. I was like, oh, okay, all I got to do is, there's these steps, and if I go through and I study hard, and then I'll be a successful trader. And then what happens is they get into trading, and it's really more of like a, oh yeah, oh my God, and what's going on here, and it's something that everybody has to kind of go through. And then once they kind of realize what's going on here, then the question is like, okay, well, how do I navigate that? All right. So on the one hand, what's interesting right now and what's fascinating about the markets is that if we rely on the news, okay, if we rely on all these macroeconomic forecasts solely for our investment decisions, and the doom and gloom newsletters, I mean, basically all that is saying is that the market should be crashing right now, okay? We've got global potential recessions. We've got the PMI falling, right? We've got Trump now starting impeachment hearings. We've got all these different things, okay? So we've got a trade war, impeachment, we got a global slowdown, we've got all these politics happening, and yet we're making all-time highs, okay? And I love this because at the end of the day, our opinion of the market does not matter, okay? And what we want to do is try to figure out a way to navigate the markets, okay? And even if we don't believe that the market should be going higher, we still don't want to fight that, right? So the whole idea of this is at the end of the day, we want to make a consistent income trading. And so how do we do that when what we think is going to happen versus what's actually happening is completely different, okay? And it's an important thing just to understand. And then the other thing I find that people get into the trap of, and this is something that I attended a talk not too long ago, and this is Molly Bloom, and she wrote the book called Molly's Game, which is actually a really good book, and it's about this kind of celebrity poker tournament. And what she said is that, and I asked her a couple of questions about this. She said, I got on for her because she just, basically this turned into almost a disaster for her, is that I got on this roller coaster ride of bigger and bigger dopamine hits, and I was willing to risk everything, okay, to keep those dopamine hits coming. And that's the other thing I find with traders is that if first of all, if they get kind of confused and flustered by the market simply doing something that doesn't make sense, it's like, okay, the market's not doing what I thought it was. Okay, that's fine, that happens. But the next step from that, which gets pretty nasty, is that they may have a couple of wins. And of course, when you make a big winning trade, that creates euphoria. And that's the result of these huge dopamine hits. And then what can happen in that case is that we chase that feeling. Okay, let's try to make that big trade again so we can experience that dopamine hit. And what will happen with this is that we'll destroy you because you'll keep taking bigger and bigger risks simply to get a dopamine hit, which of course has nothing to do with the markets. So we just want to be conscious of that. And so what we want to do is we want to set up our trading in such a way as to A, acknowledge both of those things, and then B, be able to navigate not only what the markets are throwing at us, regardless of what we think, but also to kind of control our own emotions and control our own human tendencies to do these destructive things, okay, when obviously at the end of the day, we don't want to. So, what I've found in doing this over time, kind of the keys to becoming a top trader in general, is that we want to use, and what I'm talking about here in terms of trading, okay, is that, you can put your money with a money manager and they'll say, well, we can give you 4 to 6% a year. Okay. And that's pretty good if you've got $1 billion in the bank. Okay. If you don't have $1 billion in the bank, then 4% to 6% really isn't that attractive. And so at a very minimum, I always say, like, look, if you're taking control of your own finances and you're doing some trading, and even if you're just doing it part-time, 20% annually is a minimum, and my target is 120% a year. Okay. Now, sometimes I'll go way beyond that, and sometimes I struggle just to meet that. It just depends, depends kind of how my, what's going on and stuff like that too. But the main thing with this is just kind of getting a sense of like, okay, if I can do that consistently and I can compound it, what a huge difference that'll make over time, as long as I don't fall prey to, attaching my own outcomes and expectations to the market and not chasing those dopamine hits. Okay. So that compounding is really, really powerful. And so what we want to do is we want to learn how to use leverage in a way that grows an account safely and quickly, generating outsized returns. And we want to develop or utilize proven trading setups and systems as part of our daily money making routine. All right. And a big part of this is knowing when to stand aside. All right. That's important. We'll come back to that. We want to know when a market is showing signs of turning. Okay. Even if most people have no idea how to read this across multiple time frames. And then finally, we want to eliminate compounding mistake syndrome. Okay. By knowing what the best target is for the individual stock we are trading based on its personality. And what this is that compounding mistake syndrome is simple. 1, you're taking profits too fast, and then 2, letting losses run too long. Okay. So we want to eliminate that. And we basically want to kind of, it's like the 3 bears, and I think, was it Goldilocks? She came in, there was 3 bowls of porridge. One was too hot, one was too cold, and one was just right. And it's the same thing with trading. If we're trading too cold, we're taking too small profits. If we're trading too hot, we're letting losses run. And if we're trading just right, we are flowing in and out of opportunities. Okay. We're flowing in and out of opportunities, like, okay, we're getting in here and we're getting out here. Or whatever it is. So, that's the kind of thing that we want to look at, we want to talk about, and how the best way to do that. So, and by the way, I'm looking at this right now on the NASDAQ futures and the S&P futures, and I got this buy signal here. So I'm picking up some long NASDAQ and some long ES here with the idea, and I'll talk about this here too, but with the idea that we've got a buy signal here on this that we could potentially keep taking advantage of based on what I'm reading up here. We'll come back to that though. Just kind of keep that as a note. Yeah, and Gary, Gary's saying I'd be happy at 20% of my total portfolio, and remind me of that, because there are some easy ways to do that. That's usually the reason that's hard to do, is because we're it's from over trading, different things like that too. But that's a very, very achievable goal. So, all right. So a large part of all of this is simply learning to manage ourselves. Okay. And we want to, by that I mean expectations versus reality. So when we impose our expectations on a trade, we basically ruin the trade. All right. So this is super hard to do, right? Because we never ever get into a trade thinking it's not going to work. Or let me rephrase that. We never get into a trade knowing it's not going to work, right? If there's a trade and we're like, okay, we think this has a good chance of working, we're going to take it. If we're looking at it going, there's no chance this is going to work, we're probably not going to take it, right? But the problem is when we impose our expectations on a trade, we ruin the trade. Okay, why is that? Because if we impose our expectations on a trade, we may say, well, what's going to happen here is that, whatever it is, let's just say whatever the trade is, you're expecting that you're going to make $3,000 on it. Okay. Wow, I'm in this trade. I got a good signal. Here's how many contracts I'm trading, or however many shares I'm trading. I'm going to make $3,000. And then what happens is that the stock is up, $500, and then it, turns down and stops you out. So there's a couple of things with this. First of all, we didn't appreciate the $500 profit when we had it because we were expecting 3,000. Okay. And then secondly, and the market's really, really good about reinforcing bad habits. So now it's like every time we get a small profit, we're going to take it because of the lesson we learned here. Okay. So we don't appreciate the $500 profit when we compare it to what we thought we could have had. All right. And so the bottom line is that in trading and in life, at least in my experience, our expectations can create significant stress when they don't match up with reality, which then creates lapses in judgment and bad decisions. So the key with all this is that we've got to focus on this daily, and we've got to focus on this on every trade, but it's simply to have independence from the outcome, which basically means have no expectations. And the reality of what this means, and this is a little bit, this is a deeper layer and it's more brutal, but it's no attachments. It's no attachments to the outcome, because when you attach yourself to the outcome, that's where all this starts. All right. So we'll project that we're going to make $3,000. We attach ourselves to that. We attach our egos to it, and we're screwed. And it's just, again, just something you want to be aware of. So it's a simple principle, and it is basically impossible for traders to practice this on every trade unless you are deliberately focused on this. Because what happens is when you're not deliberately focused on this, we go into what I call unconscious reptilian mode, and unconscious reptilian mode does not work. You know, sometimes you win, sometimes you lose, but basically you create a declining equity curve. So by fixating on the outcome, you instantly start worrying and doubting and mulling over things that haven't even happened. And instead, take action. What you want to do instead is take action because it's the right action, i.e., it's a proven setup and it's a proven money management process. And then accept whatever the outcome is. All right. And again, it may sound simple, but if you're not practicing this conscientiously, you'll automatically kind of go into what I call the bad human habits of trading, because that's just what we are. So let's talk about the 10x bar. So we want to avoid at all costs trying to impose our own convictions on the markets. Like I said, it just doesn't end well. And this is the trap of wanting to be right instead of wanting to make money. Because when we follow our convictions in the market, we automatically filter out all evidence to the contrary. So I don't know about you guys, but I am way, way, way more interested in making money than being right. You know, there's Oscars handed out for Best Actor and Best Actress, but there are not Oscars handed out for picking the top or picking the bottom. So one trade I'm known for, because I did this live in front of a group, did $1 million day trade in Tesla. Of course, that was amazing and fun and crazy. But a lot of times people ask me, well, how did you know? Okay, when you got into that, how did you know to hold on to it? And the scariest part of this entire trade was at one point I was up about, let me get over here. At one point I was up about $300,000. Okay, that was a lot of money. And the stock, and I think the stock was at $151. I don't remember exactly. And at that point, it started to come down. Okay. And at that point, my profit went from $300,000 to $200,000. And then I remember it got to $180,000. And at that point, I really had a come to Jesus moment and thought, you know what? This is a unique situation. There's high short interest on this stock. There's amazing buying, and I am locked and loaded here. This could rally into the close. And how am I going to hold on to that? And so what I was doing on this is I was watching this, okay? Now, I think it's important to understand here, you know, this is like a 30-minute chart, right? And so it's hard to tell, it's hard to see that there was a pullback here. But, you know, it was right around in here where we kind of pulled back. But you can see here, we've got these green bars, okay? These are green 10X bars, and I'll talk about what those are. And we've got these dots, which is super important, and I'll talk about what those are. But by simply disassociating myself from the outcome, I said, you know what? I consciously made a decision that I'm just going to follow this trade, and I'm just going to submit my will to that of the market. It allowed me to stay in, and I was able to hold into the close. And then the next morning, I didn't sleep that night. I mean, to be honest, it was a really big position. And then we gapped up the next morning. And then I started really closing it out at that point, because at that point I was up like $1.4 million on this trade, because I had a lot of, I was just like, all right. So that's how I kind of stayed into it. And so the question is kind of like, what is the 10x bars? How do we time all this? And then more importantly, how is this, how can we improve this? What is this whole 10x bar on steroids? Yeah, no, Brad, it was a pretty amazing one. Yeah. So how to read the 10x bar. So I know a lot of you guys have it, but let's just do a quick review of this. And again, let me come back here to, because I'm going to come back and revisit this. So by the way, we do have a buy signal here on the NASDAQ futures. So I'm buying the NASDAQ futures here based on this signal. Okay. You can see here that we've got dots, and you can see here that the 10x bars are turning green. I'm going to talk about what all this means here shortly. But again, right now, I am going long. I'm going along the NASDAQ futures, and I may need to pick up some of the S&Ps here as well. So here's what this looks like, and then we can see what's going to happen here. So here's the NASDAQ futures. I got 82.65, 75, 82.66. And again, I just want to submit my will to that of the market and see how this is going to go down. And then I'm also doing the S&Ps here, because we've got a similar signal here. And on the S&Ps here, just doing, again, long futures as well. So again, I want to come back, because if I get a signal in real time, I want to take it, but then we can kind of come back and then we can understand, like, okay, well, what is it that's happening? Why do I want to take this? And then ultimately, where am I looking to get out? Because one of the biggest questions, so we have a mastermind group that we're meeting with in Austin today and then tomorrow. And what we do during the mastermind is that we talk about kind of strategies that we're working on right now. And then everybody in the group also kind of shares kind of what they're working on as well. And one of the biggest things that came up was, and this came up, I think 3 or 4 times during the presentations, is really that when do I get out? And it's like people feel comfortable with entries, but when do I get out? All right. So in this particular example right now, we've got a good entry. Okay. And I'll talk about why that's a good entry. And so now when do we get out? Well, if we are projecting, okay, if I'm projecting right now, like, oh my gosh, I would love to make $5,000 on this trade, because here I am in front of a live audience. And if I could make $5,000 on this trade, I would feel good. I would feel like a hero, right? Well, that's all conflicting ideas with the idea that I want to have no expectations to the outcome, and I want to let the market give me what it's willing to give me. Okay, I don't know if this trade is even going to work. However, I've got a plan, and then I can just watch these bars, okay, and submit my will to that of the market. Maybe what's going to happen here, okay, is that this is the high tick, and now we start to turn over, we get red bars, and I have to sell, and maybe I break even, or maybe I lose, okay? Or maybe this thing is going to break out to new highs. The point is, I don't know, okay, and I'm comfortable with that. So we'll see. Let's see where, we'll see what happens with that. So Ben's got a good question. So how do the 10x bars differ from the color bars that are with the Squeeze Pro indicator? I'll come back to that, because that's a good question. They are completely different. It's just different logic and different kind of reasoning, but I'll refer back to that here. Yep, I'm going to get to the arrows as well. Okay, so let's dive into this. So 10x bars. The 10x bars basically is a tool that looks for conviction. Okay, and there are 2 parts to the 10x bars: momentum and conviction. So first, let's do this. And so again, this will just be a couple of slides to kind of refresh all of us on what the 10x bars are. So first, we're going to look at the momentum component, and in a nutshell, if you see green bars, that basically means that momentum is strong and accelerating higher. Red bars means that momentum is accelerating lower, and then yellow bars, and these are actually really important, means that there's no price momentum, higher or lower, and it means that they are neutral, okay? So what is driving this? What are the guts of the indicator? So this is just important to take a look at. So here's what it looks like. So you can see here there's green bars. Okay, that basically means that indicates that momentum is going higher. You've got yellow bars, which indicates chop and basically a lack of conviction. Okay, so this is conviction higher. This is conviction lower, okay, with the red bars. And then this simply is LOC, okay, lack of conviction. And it's important to understand and acknowledge, does a market have conviction? And if so, is it to the upside or the downside? Or more importantly, does it lack conviction? Okay, because a market that lacks conviction tears people up if they don't understand that there's no conviction there. All right, so what are the guts of this? It's very simple. So first of all, here's the ADX. If the ADX falls below 20, okay, that basically represents a directionless market. Okay, and in that case, what's going to happen is that these bars are going to be painted yellow. All right, so yellow bars basically mean you've got a directionless market because the ADX is over 20. Now, if the ADX is over 20, it means that there's conviction, okay? But here you can see there's conviction to the upside, so it's green. And then over here, there's conviction to the downside, so it's red. Okay, well, what drives that? Well, that's an indicator called the DMI. And of course, again, these are all tools that should be on your platform. So for the DMI, if the DMI plus, which is green, is above DMI minus, and the ADX is over 20, you get green bars, okay? On the other hand, if DMI minus, which is red, is above DMI plus and the ADX is over 20, you're gonna get red. Now, if the ADX is under 20, the DMI doesn't matter because that basically takes precedence and it's yellow. So that's kind of how it guides us. So again, just to do a quick recap here, if there's green bars, it simply means that the DMI plus is above the DMI minus and the ADX is above 20. If there's red bars, this means that the DMI minus is above the DMI plus and the ADX is above 20. And then finally, if it's yellow, it basically just means the ADX is under 20 and it doesn't matter if the DMI plus or minus is on top, okay? ADX under 20 basically means a lack of conviction. So one tip I found here is that if a stock or a market breaks out to new highs with yellow bars, it'll generally fail, okay? So why is that? No momentum. So you want to wait for the market to prove it's ready to go instead of hoping that it's ready to go. All right, so it's not all here. So while I found that identifying momentum was very, very, very helpful in my trades, I noticed that sometimes there were moves that were much bigger than normal, okay? And this always occurred, not surprisingly, when volume was about 50% above its 20 bar average volume, okay? This is what's known as conviction, all right? So I'm a big fan of momentum, right? Is there positive momentum, i.e. green, or is there negative momentum, i.e. red, or is there no momentum, i.e. yellow, okay? Now, we also then want to match that with conviction. Now, conviction and yellow typically don't go together, okay? Volume typically comes in when there's momentum. So is it green momentum with or without conviction, all right? So what does that mean? What that means is that if you are, and this is how I used to look at this before I met Eric. I was like, okay, here's a chart. We're going higher and the ADX is above 20 and the DMI plus is above the DMI minus. So we got some good momentum there. And oh boy, volume is above average. So this should keep going. So that's how I used to look at that. And so now what you'll see with the 10X bars, of course, is this. So this, if you guys already have the 10X bars, this is what it should look like on your chart, where if there's, if you've got momentum and then you see some dots, that's basically fuel in the tank. Okay, that means that it can last. And if you're consolidating and it's green and you see a dot or two, that's great. And when you see that breakout, man, when you see that volume, it just gives you confidence. It gives you confidence that it's not going to roll over and die. So you stay in this, you submit your will to that of the market. This is like the Tesla trade. Like, oh my God, I've got $300,000 in profits and I don't want it to go away, but by God, I'm going to stay in this until it's done. And then when you start to see some red and yellow here, that's basically telling you that, okay, this thrust is wrapping up. Now, maybe it eventually goes higher, but with options, okay, especially with options, we are buying, if we're long an option, in this case calls, and we buy a depreciating asset, we don't want to hold through the pauses, okay? If it pauses, we start losing money in premium decay, but we want to stay long as long as this is happening, okay? And so the main thing we want to know is that we don't know when it's going to end, all right? But with this, we can know it's like, fine, I'm just going to stay in it until it turns yellow. Maybe it's going to turn yellow here. Fine, if it does, we're going to get out with a small profit. But maybe it doesn't turn yellow till up here. Fine, we're going to get out with a bigger profit. But the main point is we're submitting our will to that of the market. We are not trying to guess what's going to happen next. We are not trying to sit there and say, I want to make $3,000 and then just become completely disillusioned and disappointed when we don't make $3,000. All right, so that's a huge key with this, and it's why I'm such a fan of that. Okay, so Mark, yeah, so the round dots in those middle of these bars basically indicate, and you can set, and this is flexible in the settings, but when you see the dot, that means that it's a 50% volume increase, which is great. So if you see a breakout like this with dots, it means that you're getting a breakout with high volume. Now you might ask, well, why not just look at the volume, which is fine. That's what this looks like. So what I find is that if I've got too many inputs, you know, if I'm looking at this, I'm looking at this, I'm looking at this, I'm looking at this, I miss stuff. So I try to keep things dead simple so that I don't miss stuff. Okay. So now it's like, oh, great, we're breaking out, we've got volume. I want to stick with this, okay? All right, so that's the 10x bars. But someone earlier asked about the arrows, okay? And for the arrows, you know, on this, so, you know, here, this is a good example. I mean, again, a live example here where we have an arrow, okay, which is a buy signal, which kind of drove me into the NASDAQ futures. And now we've got green bars with dots, which at least for now, I'm like, you know what? I'm fine sticking with this. Now, again, if I sat here and said, okay, I want to make $5,000, and I would have got out when I was up $5,000, I wouldn't have been able to let this run. So now it's up $6,400, right? Now, I'm the first one to say that by the end of this presentation, maybe the NASDAQ rolls over and dies. But again, my whole goal here is not to project my will on that of the market. My goal is to set this up in such a way as that I'm able to participate in whatever the market is willing to give me by not poking my expectations on it. Okay, so we'll see where we are at the end of this. At the end of this, if I'm down $50,000, you can tell me I'm an idiot, and then we'll go try something else. But so far, so good. So yeah, so Abe is a good question. The big challenge, 10x, is time frame. You know, the 1 hour shows, but not the 4 hour. And yeah, so we'll certainly talk about that. Okay, here, I'll take this, get this real quick. All right, so let's put that over here. Okay, so what about those arrows anyway? So now what we want to talk about is what I just simply call natural turns, okay? So in any market, if it's an uptrend, it's going to make a series of higher highs and higher lows, right? Sideways market, same thing. And then a downtrend, you're going to make lower lows and lower highs. Now think of this, you know, with the 10x bars, you'd have green 10x bars here, yellow here, basically, and red here. But the question is how do you time these turns? You know, I mean, if this is a weekly chart, these are big moves, right? So you don't necessarily, you know, what I like with options is you hold on to this thrust and then you get out, okay? And then you get in on the next turn. So you don't have to hold through that pullback. And I think that's important, especially with options. So, so what we're going to talk about here is the concept of reversion to the mean. And reversion to the mean is just basically the level where price is likely to return. You know, a lot of times it could be like a 21 period moving average. If it's a really strong market, it could be an 8 period moving average. You know, But the point is that there are certain triggers that we can look for that give us a heads up to say, hey, this thing is setting up to revert to the mean. So we need to know when stocks are powering away from the mean or dive bombing below the mean. Okay, and we need to know when this power move is over and prices are likely to start, kind of heading back. And so that in a nutshell is trading, just being able to time these ebbs and flows with, for lack of a better term, with grace, right? So it's not this stressful thing. So it's our brains and ideas and thoughts on what we think should happen next that get in the way versus being able to set up a chart where we're confident that we can just let it unfold and follow along, okay, with no input. So first, what I want to do is talk about 21 bar price channels. So back in the 80s and 90s, if you guys heard of the turtles, there were a lot of systems that traded using 21 bar highs as buy signals and then 21 bar lows as sell signals. Well, what happened is that became very popular and it doesn't necessarily work anymore to do that. However, the 21 bar highs and lows are still really, really good for shorter term reversals. So if we look at this, so this is a price channel. And again, this is a tool that's available on any platform. It's not a secret or anything like that. You did never understand those damn turtles. So again, these purple lines represent the 21 bar high and then the 21 bar low. So as you'll notice here that, as we come up here and we make new 21 bar highs, this happens to be a daily chart. You'll notice that this moves up and then it trades sideways, 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 sideways until we make new highs. And then the 21 bar comes up. And then at some point, it's going to look back 21 bars and it's going to say, oh, the low needs to be adjusted. All right. So this, if you look at this and go back 21 bars, then the low is right here, right? And if you're right here and you look back 21 bars, the low is right there. And so these 21 bar highs and lows are a very kind of a real channel. And so, so the next step from this is, if we look at this and say, again, even with a strong uptrend in a stock like Amazon, you'll note that the stock's not going to go straight up, or right now it's in a downtrend, you'll note that it's not going to go straight down. And so what I like to look for here is after each breakout to new 21 bar highs or lows, at some point the sellers will come in. Okay, and usually it's longs who are getting nervous and they're wanting to take profits if they start selling. And as a trader, okay, I hold options, is this selling going to be something where Amazon drops $5 and then makes new highs? Or is this something where, it's a larger pullback that really screws up your P&L? Okay, and that's what we want to avoid, because typically with options, these are going to be shorter term trades. And by shorter term, I don't mean a scalp. I mean, it could be a trade that lasts a couple of weeks, but holding through those retracements kind of sucks. Like I would rather time those retracements to the best that I can. So what you'll notice here is that, we're coming up, we make new 21 bar highs, and then there's some consolidation and a pullback. And in this case, it's not much, right? But you can notice up here, we hit new 21 bar highs, and at some point, we take out this low, and in this case, Amazon dropped like $60. Now, I don't know about you guys, but if I'm holding calls, I don't want to watch Amazon drop $60. I want a heads up that might happen and I can get out. Okay, so that's where this comes into play. So the same cycle plays itself out no matter what time frame you're looking at, whether it's a 5-minute chart or an hourly chart, et cetera, et cetera. Remember, that was an Amazon daily chart, and I'm looking at the NASDAQ futures here on a 5-minute chart. Again, keep in mind, here was my entry right there. There's the arrow. And now I've got the green 10X bars telling me, hey, John, don't freak out. You're okay. And now I can come over here and say, you know what? Gosh, if I was just going to try to make $3,000 and get out, I'd have missed out on this $14,000 profit. Now, I'm the first one to say this trade ain't over yet. This could reverse and it goes negative. But the main point of this is that I'm willing to subject myself to the will of the market. I'm not trying to project. I mean, look, it would be great to make $2,000 and flip it out and move on. But what I want to do here is I want to participate in this market as long, what's the right way to say this? I'm thinking of a Mark Douglas quote, and he's like, look, allow yourself to essentially be present for the profits that the market wants to give you, okay? And so does that make sense? So I don't know when the NASDAQ is going to stop here, you know, and if I just sit there and project what I think is going to happen, I'm going to miss out on what's truly happening. So it's a little scary because I don't want to give that money back, especially in front of a live audience, but that's, you know, that's kind of how it works. So going along for the ride. So, okay. Okay, so here's how the 21 bar works. So once a 21 bar high or low is made, price will go for a while, and then at some point it will reverse on profit taking. And for the purposes of our discussion, we're most interested in identifying the moment in time when that reversal is taking place. Okay, so now what you're going to see is kind of how the sauce behind the arrows. So if you look at this, we broke out of the 21 bar highs. We're moving higher, we're moving higher, we're moving higher. And then at some point, and you can see right here, we break below the low of the high period. Okay, this happens to be a 30-minute chart. So we broke below the low of the high period. Here's the high period, here's the low. We broke below the low of the high period. That triggers the retracement. Okay, and then we turn back up. We break below the low of the high period, and boom. Now here we break through the high of the low period, okay, and that starts the next rally. So this is where hope and lope comes from. Now in my book, Mastering the Trade, I've got a chapter on this called Hope and Lope. The main difference here is that in the book, I did not incorporate 21 bar highs and lows. So what would happen is that we'd get a lot of signals. It's like, oh my God, here's a signal right here. Like that would have been a signal. But what we want specifically is we want price to probe new 21 bar highs first. We want prices to probe new 21 bar lows first, okay? Then and only then are we interested in this signal, all right? And that's a really, really key part of this. Yeah, exactly. So I'm not going to read all that because I just said it. So now this is the logic behind the arrows. Okay, so the reason there's an arrow there is that this is a bar that broke below the low of the high period after a new 21 bar high was hit. Okay, this arrow showed up because we broke below the low of the high period after a new 21 bar high was hit. This got a buy arrow here because we broke below the high of the low period. Okay, here's the low period, here's the high. We broke through it, we got the arrow, right? So of course we're not buying the dead low, but boy, we're getting close. And here's what's amazing about this. You know, a lot of times when I talk about trading, I talk about, oh my God, you know, you got to have stops that are like 2 times the ATR, which are pretty wide. Here you don't have to. Here your stop is right here, okay? So the nice thing about this, the beauty of this, is you can have much bigger size and much tighter stops, because if it takes out the lows, we're done, all right? So that's a really, really awesome thing about this. All right, so here's an example of a trade that we did, God, was it last week? The last 2 weeks have been nuts. So we were in Las Vegas last week, and we were doing a live trading event on Wednesday, and we were watching Google, and Google came down and we got an arrow. I was like, all right, we got ourselves an arrow. So I bought calls on Google all through here, and my stop loss was the lows. And frankly, I was not too happy with the close. I mean, it was like a small loss by the close, but I didn't take out my stop. So I was hoping the next morning there's to be some strength. And the next morning, boom, we rocketed higher. And as you can see, we kept going and going and going. And then boom, we got a sell signal, okay? So on that particular trade, what we did is we bought call options, okay? I bought calls. I sold a put spread, bought more calls, sold some naked puts. And in the course of one day, using those signals, made about $37,000, which was great. Now, obviously, Google's a big stock, so that might not be the best choice for everyone. But the point is, whether we're trading the NASDAQ futures or a stock like Tesla or Google or whatever, the principles, okay, the principles are the same. So the key problem with all of this is that in life, having conviction in something is great. This gives a person fortitude to keep pushing through the hard times. In trading, however, we must be aware of our conviction of what we think the market is going to do next, because that doesn't work. I mean, just bottom line, it doesn't work. I always like to say, this is like being convinced you can levitate. Just because you are convinced you can levitate does not mean in any way, shape, or form that you will be able to do so. Becker Vineyards wine is really good. That's awesome. I will toast you as we sit here. Okay, so let's get through this. You know, bullet points are kind of boring. Okay, so here's an example of a trade. This one was crazy. Now, look, I'm going to be the first one to say that I did not think this was going to be a big trade. All right, so on this day here, Tesla was up $40 a share already after earnings. I was not long through earnings on Tesla because that's not really a trade that I do. So the next morning, I'm sitting there in my office. Here's a 1-minute chart. I rarely use a 1-minute chart, but I do in this case. So boom, we gap down. Now I see a little arrow here. That's fine. But what I'm waiting for is green bars. Okay. So here's another arrow. So the arrow's giving me heads up. Again, because I don't know what's going to happen here. That was up $40. We get a green bar. Great. That happens at $299. We were as low as $296. I load up on some calls here. Here's my stop. Now, there's a dot. Woo, boy, conviction, right? We already got momentum with the green. Conviction. Okay, now here's a little sell signal, but again, a 1-minute chart. You know, 1-minute chart, you gotta keep in mind like a 1 minute versus a 30-minute and all that kind of stuff. So that's kind of a heads up. But what I'm looking for here is that the overnight Globex high was 304.93. So I'm like, okay, I'm a little, okay, it's a heads up, but we're still green, we're still green, we're still green. Oh, we're coming up to the high. Boom, we push through it with conviction. There's dots. All right. Now, when I see the arrow, I get out, okay? Why? Because we had already pushed through this high, and, you know, certainly could go, but that was, you know, that was enough. And at this point, this was a 30-minute trade where I ended up making $62,000. Okay, and again, what's nice about this is that we can spend a lot of time as traders, you know, looking at all these different charts and kind of wondering what's going on. But if we, like Disney today was up like $10. Guess what I'm gonna do tomorrow? I think tomorrow there's gonna be some more action in Disney. I can use the same chart for Disney and see if there is any opportunity there. Okay, so another way you can use this though is for income. So here's a 30-minute chart of Netflix. So this was after earnings. You can see it broke down, and then I'm watching this. So first we had green, then we had red. Okay, remember, green is conviction, but it's or momentum to the upside, Momo upside, and then this is Momo to the downside. But what happens when we turn yellow? Okay, lack of conviction. All right, so if you see a stock that suddenly has a lack of conviction, what do you think is the best strategy for that stock? So what do you guys think? Here's a stock, it had upside conviction, it had downside conviction, and now it has no conviction. What do we do? Yeah, exactly. So I see a lot of people kind of typing in, basically it's premium erosion, right? And so what I did with this is a couple of different strategies, but you're going to notice that they're all the same idea. So here is an iron condor. Here was a put credit spread. Here was another iron condor, and then a butterfly. And again, you can see here, I mean, they're kind of, there's different expirations, but it's an income trade. And basically what I'm doing is the market is telling me there is a lack of conviction, right? There's a lack of conviction, and I can take advantage of that with options by selling. And so that's what I like about it as well. Okay, let me come back here real quick. So now you'll notice here, this is my futures trade, right? So I got in with the green arrow, and I'm holding. Now we just got a red arrow. That's just telling me, again, on a 5-minute chart, that there is a sell signal. And so now I got to decide like, okay, well, is that where I want to get out? This is something where you want to have kind of your plan in advance and all that kind of stuff too. You can see there's a 30-minute squeeze here. So this could go much higher. But at the same time, when you get into something like this, you want to be clear on, what it is that you're trading, what it is that you're doing. For me, I was just like, well, I just wanted to do this 5-minute trade. I think there's the potential that this could go higher, certainly. So what I'm going to do here is I'm going to take the bulk of this off. I'm going to take off 30 contracts and just say, you know what, that was a sweet trade. Let's book that profit. And come on. Still got 22 left. Still working that order. I'm driving the markets down. Let's see if that comes back up here. What are we at? What's my order at? I'm trying to get out at 77 and a quarter. So 77 and a quarter. So I am at, there we go. I'm the ask. 77 is the ask. Let me see here if I can get out. So, or I might have to change it. So if we look at time and sales here, I'm trying to get out at 77 and a quarter. Now I got the signal, so I don't want to dick around with it too much. No pun intended, because one of our favorite sayings is "Don't be a dick for a tick." 77. All right, so let's. I'm just going to go ahead and change this and just get out because we've got things to do here. All right, monitor, orders, cancel. So let me try this again. We are at 67.50 by 25, fine, send. Okay, so now I'm long 10. So what I've done is I've booked profits. I'm leaving 10 on because of a different signal. And what I'm referring to there is simply what I call multiple time frames, which again, we'll come back to. So I was able to essentially play this particular trade while we were here on this 5-minute chart. And now the question is there some, is there some other action here? Because you're going to notice, and again, we're going to talk about these in a second, but you'll notice here that I'm actually able to access other time frames. And so the question is, what are those things and what are they telling me? So we'll look at that. All right. So with momentum, so momentum versus conviction. So if you've got momentum, so let's just say green bars, you can still look for what I would simply call expected moves. If you guys are familiar with the idea of expected moves versus greater than expected moves. But when you've got conviction, those are the dots, that's volume, then you have a high probability of greater than expected moves. That's why I was so, like, when I got that Tesla trade, it's like, well, we got the dots, we've got momentum, we've got conviction, I need to hold on to this. And then you can combine with this with the arrows to kind of time it. So basically at the end of the day, momentum plus conviction plus reversal arrows equals awesome, because by following these tools, you're essentially following the path of least resistance in the markets, which allows you the opportunity to kind of flow in and out of the opportunities that the market is presenting to you. Sometimes those opportunities are not going to be that impressive. Sometimes those opportunities aren't going to work. But the main point is that when those opportunities do present themselves, and they are amazing, like that Tesla trade, you're able to stay in it, okay? Because that's really what make or break a week or a month or quarter, is cashing in on those big moves, meaning that when you recognize that you're on the right horse, stay on that horse. And that's not easy to do, right? Okay, so now let's talk about all of this in the context of multiple time frames, which basically means on steroids. Okay, so what does that mean? So when I started looking at 10x bars, I mean, obviously I loved them, but the problem was, well, if I'm looking at the 10x bars on the 5-minute chart, what are they doing on the 30-minute chart? What are they doing on the daily chart? What are they doing on the weekly chart? Do I need to look at all these different time frames? And so I did spend a lot of quality time looking at something like this, which honestly was an eyesore. And so what I would do is like, okay, well, here's a yearly chart, okay, a quarterly chart, a monthly chart, a weekly chart, the 4-day chart, all the way down to the 1-minute chart. And I could sit there and say, okay, gosh, we've got green here on the 3-minute and here. And then what I would do is kind of narrow it down and say, okay, I need to look at 2 time frames. So like on Tesla, you know, here's a squeeze on Tesla on the 2-hour chart, but then I'm going to time it on the 5-minute chart. Okay. And this is a trade we did in Vegas and it was great. This was a 6-figure trade. So I'm not complaining, right? But what happened is like, you know, in this case, I remember this in Vegas where, you know, I was already up 100,000, which again is a lot of money, right? I'm not, it's just, it's a, but it's like, do I get out or do I hold on? But when I looked at this, it's like, okay, well, it's not giving me a sell signal. There's no arrow and we've got all these dots. So hold on. And that was good for another $20,000 by not actually going out and doing another trade. It was just being able to be patient and stay on the horse that I was on because I was confident that it could continue going higher, right? So that's the kind of tool there. And then you can see here, it finally got the arrow. You know, this is Google. So same thing with Google here. Nice move up. I'm going to hold, I'm going to hold, I'm going to hold, I'm going to hold, I'm going to hold. Boom, there's the arrow. Get me out. Okay. Again, that was a nice, this was a nice trade there. In this case, it was smaller size, still good for some cash. So this got me to thinking, so if there's hidden, you know, if there's hidden time frames we need to look at, what time frames do we need to look at? But it's just like, there's got to be a way to make this easier. And so this is where anytime I get excited and dismayed, I call Eric. And so I think Eric has a knee-jerk reaction to when I call or when I slack, because I do have that combination of emotions where I'm both excited and dismayed. I'm excited about the potential of the idea that could come to fruition, but I'm dismayed because what if it doesn't work? And what if I have to keep looking at all 18 or 20 time frames and all of those, because that takes up a lot of time. So Eric listened to me and he's like, I got it. And so he came back with this. And so now you guys understand the 10X bars. So now we've got a tool where you can look, you know, this is a 1-minute chart. And again, I'm not necessarily interested in the price action on the 1-minute chart, but what I am interested in is from a 1-minute chart, at a glance, I can see across all 18 time frames from a 1-minute chart all the way up to a monthly, and to see what are the 10X bars on those time frames. So for example, on Tesla, the monthly chart as of the screenshot, which was, you know, I think a couple days ago, is yellow. The weekly through the 10-minute chart, we're all green. Imagine that. 10X bars are green, okay? So when you got green on these time frames, you know, any red or yellow on the smaller time frames, you know, you're looking for that arrow to get back in on what's really happening. Does that make sense? So if the majority of the larger time frames in this case are green, then red 10X bars on those smaller ones is a heads up. Drill down, look for the arrow, because that's going to be your entry, because you're looking for this to go back in alignment with what's happening here. Okay. So I thought that was pretty amazing. So as I looked at that for a couple of days, because we've been talking about the arrows too, right? And so I was excited about this, and I was like, all right, Eric, look, I love this new multi 10X tool. It's really awesome, but I'd really like to know if there are these hope and lope. Remember, hope is high of the low period, and then lope is low of the high period, arrows going off on other time frames so I don't miss them. Now, Eric thought about that for a couple of days. Oh, by the way, look at the NASDAQ. I mean, how perfect did we time that? We got in here, here's the arrow, and, you know, sold 3/4, you know, and stop at the lows here. I mean, that's, you know, it doesn't get much more picture perfect than that, right? So, all right, so Eric said, let me think about that. So boom. So now what Eric has done is that now we've got a tool at our fingertips where we can see all 18 time frames in terms of, all right, so PayPal, we've got a monthly 10X bar that's green, okay? The weekly, the 4-day, the 3-day, the 2-day are red, right? So obviously we got some crazy stuff going on there. But you'll notice here, there's a B right there and then an S right here. What does that mean? That means that on the 4-hour chart, a buy arrow just fired, okay? And that'll stay there for as long as that 4-hour bar is active. And then when it switches to the next 4-hour bar, it'll go away. So now all of a sudden this became really amazingly powerful because we can look at a stock or a market and across 18 different time frames see if there's momentum or lack of momentum, i.e. is there green, buying momentum, red, selling momentum, or lack of momentum, yellow, okay, via the 10x bars. And more importantly, we can see in real time, are there any reversal arrows happening on those time frames? So all of a sudden, not only have we consolidated all of these 18 time frames into one, but this is basically giving us a blueprint to help us guide the markets. So anyway, this got me super excited. So he gave me this and I started playing around with it. So these are trades, I think, from Sunday night. So I'm looking at this on the S&Ps. There's a 2-hour chart. So if I'm looking at the 2-hour, I can look up here and just basically see that we've got a mixed market, right? I mean, the S&Ps are at all-time highs, but the monthly chart is yellow, i.e. lack of conviction. The weekly chart is yellow, i.e. lack of conviction, again, according to the ADX. The 4-day is yellow. The 3-day is green. The 2-day is yellow. The daily is green. The 4-hour is green, yellow. So it's mixed, okay? It's mixed. And what this means is that we can still expect some back and forth. So I saw that we got up to 3,100 on the 2-hour chart. We got the sell arrow. So I'm like, all right, great. I'm going to short. So I shorted some S&Ps. And then what's interesting here is when I shorted, as I'm holding on to it, a squeeze started to develop. And that's honestly, that's what happens quite a bit. And so that was great. And then I'm also looking at the NASDAQ, and this is the next morning. It's like, okay, well, what should I do with the NASDAQ? Oh my God, we're getting sell arrows on the 5-minute chart and on the 10-minute chart. And you can see that the 10x bars are red and yellow across the board on these lower time frames, and there's a big squeeze. Great, I'm going to stay short on these. So, and then if we go up to the 30-minute chart, kind of similar to the NASDAQ trade I just did here with you guys, I had this beautiful sell signal on a 30-minute chart. So great, I can just stay into it until what? I get the buy arrow if I happen to be watching it, right? Or so now we can say here's the NASDAQ. So on the NASDAQ, what I did with this is I shorted 20 futures contracts. This is on Sunday night. I bought some put options. Of course, you can trade options on futures overnight as well. And then I sold some calls, and that was good. I woke up the next morning to $23,000, and I saw that arrow, and I took the profit. For the S&Ps, same thing. Shorted some futures. Now in this case, you're going to notice something here is I shorted some futures, but then I bought some calls since this was a bigger trade. And the idea was that I was going to lose money here and make money here. But if for some reason the S&Ps were up like 100 points, I'd have my hedge risk. And then I did buy this long kind of a straddle at 775, and at the point here it was, you know, at 895. So again, at that point, you know, it was good for about 20 some odd $1,000 there. And so that was all with this. Now what happened is when I got out of the S&Ps, is I'm sitting here and I'm watching, and it's like, boom, here's a buy signal on the 15-minute chart and a buy signal on the 20-minute chart. You got the arrows. So yeah, let me get out of that and let me take the profits. So what I like about this is like it's a dashboard where you're essentially able to see at a glance the conviction and momentum across all the time frames, and are there any reversal buy and sell arrows, which I think is kind of cool. And then also I'm a huge fan, we talked about this in Las Vegas, and during our mentoring and mastermind class today, I talked about this as well, is the goal of being able to set up larger trades, you know, you like, for an example, short futures and long calls, where you can sleep overnight, because if it doesn't work, you don't lose much. And if there is a big move up or down, you can make a killing. All right. And so, and that's a big part of this as well, is just setting up trades where you can have the luxury of allowing it to unfold because you've structured it correctly. All right. So all of this information I think is really, really good for entering positions, but I really think it's priceless for knowing when to exit a position. Because, I mean, to be frank, anybody can enter a trade. Entries are a dime a dozen. Where the money is made is on the exits. And by the exits, I also mean it could be a small loss. That's an exit strategy. But more importantly, it's knowing when to recognize the distinct possibility that you have a big winner on your hands, and being able to A, hold on to it with confidence, and B, not freak out and just get out because you're up $1,000, because in your mind, that's either A, all you expected, or all you feel that you deserve, okay? And the thing about the markets is that you will, your P&L is a reflection of basically what you, once you learn to trade, the P&L is a reflection of what you feel as a human being that you deserve. Okay, and that starts getting a little bit deeper. But if you get to the point where it's like, well, I deserve what the market's going to give me, meaning that that could be infinite, then if you have tools like this, you're basically allowing the market to do that. You know, it's kind of like, you know, the market's like, help me help you. And if you, so hopefully that makes sense. I mean, I don't want to get too much into psychology here, but the market is, you know, the market doesn't care who you are, and that's a good thing. The markets can give you a lot as long as A, you believe that you deserve it, and B, that you follow a plan that allows that to happen. And so that's what I like about this stuff. And the other thing here is don't fight the trend. I was talking to someone the other day with Carolyn, and they were just talking about how they're getting killed on Apple on the short side. And I showed him this and was like, dude, why are you short? Oh, it's so high. Well, you've got conviction and momentum across all 18 time frames. Just because you think it's too high does not in any way, shape, or form mean that it's too high. Like don't fight that. And so I think that's really, really important to understand that. So anyway, so hopefully this is kind of helpful. I mean, so these are all strategies that you can, do this stuff on your phone. I frequently do a lot of trades, from my phone. At the end of the day, what we want to make sure of is that our equity curve looks like this. The whole idea as we approach 2020 is your goal that should be is that your account balance goes from the lower left to the upper right, and it's not going to go straight up, but it should trend higher. And it can trend higher if you've got specific signals that are valid and that you allow those signals to play out. Because if you don't have that, what's going to happen is you're going to react to the next trade like this. This is a story Mark Douglas told where if as a 5-year-old kid, your first encounter with a dog is Lucy, and that's Henry and Mandy's dog, then for the rest of your life, anytime you see a dog, you're going to have warm feelings because your experience with that dog at a cellular level brought pleasure and happiness. Now, if at 5 years old, your first experience with a dog was this, and you got your arm ripped off, you will, at a cellular level, panic every time you see a dog. And you'll actually have that visceral reaction before you're even conscious about it. And the only way to get through that is through therapy. Okay, guess what? In trading, you are a reflection, if you're unconscious about this, of your last 2 trades. If your last 2 trades were good, you're going to feel good and you're going to go into the next trade with a good mindset. If the last 2 trades ripped your head off, you're going to feel bad and fearful, and you're going to go into the trade with that mindset. Feeling euphoric or fearful about the next trade are both devastating. You want to be neutral. You want to be, I'm just going to allow the market to give me what it wants to give me. With these tools, you can do that. Without it, you're going to be a slave basically to your emotions and how human beings are wired. So at the end of the day, I'm a trader. I like developing the stuff, sharing what I'm doing. I think trading and human development go hand in hand. I always joke my life would be easier if I just traded, but this is the kind of stuff that's fun. So what I want to do is, first of all, a couple things here. For those of you that have the 10X bars, I don't know if you guys have the hope and lope arrows. That's something that we have, but you should get them. And then secondly, this multi-10X tool and multi-arrow tool, I think is great. And that's something that we're going to be releasing with a class. And so if you guys are interested in any of this stuff, so again, if you already have the 10X bars and the arrows and you're like, John, I'm cool with that stuff, thank you, awesome. That's you're good to go. What I'm going to do though is a class next Saturday, and included in the class is going to be this new multi-10X indicator where you can see, all 18 time frames with the 10X bars and with the arrows, okay? And then if you don't have the arrows, you'll get the arrows as well. So what we're going to be doing is a strategy class where we're going to be talking about all of the 10X and arrow strategies that are working in 2019, and then I'm going to be using in 2020. I did do a class on the 10X bars in 2017, and guess what? That was for the 2017 markets. The markets have changed a lot since then. So now we're going to combine 10X bars and the arrows for the strategy class. And in addition to that, If you thought that that multi-10x thing was cool with the arrows, by the way, I think it's a total game changer. That's going to be thrown in to this class as well. So I think that's going to be a lot of fun. And then what I like to do is with the live trading, and the analogy I use here is that if you got to play golf in a charity tournament on Monday and you've never played golf before, so you spend the weekend reading all the books you can on golf. You're going to go in on that first drive. You're going to have all the knowledge, all the book knowledge, but none of the hands-on training, and you're going to suck. That first drive is just going to be horrible. It's the same thing in trading. So on that Saturday, November 23rd, we're going to spend a lot of time on theories and charting and here's your blueprint and here's your checklist of what you want to look for with the 10x bars and the arrows and this new multi-10x tool and how to do this stuff and how to structure your trades in such a way where you can actually do big size with tight stops, okay? Which is different, which I've never done before. But if you don't practice it, you know, with a coach, like with golfing, if you don't actually go to the driving range with a coach, you're going to have a hard time, even though you read a lot of books. And so that's what the live trading is for. And so, we'll trade together live for 2 days. And then also at the end of the year, I do this tax loss harvesting. It's, it's made money 10 years out of 10, and you get a free ticket to that. And then if you're really into the live trading, the Elite is going to include another 2 days of live trading as well a few weeks later, so we can kind of continue to follow up. All right. So that's what we got. If you go to simplertrading.com/arrow, that will take you to that page. And then I'm happy to answer questions. We can see kind of what all is cooking here in the markets and stuff like that too. So let's see here. Real quick. So this basic package for $597, we're going to do on Saturday, November 23rd. And by the way, when you order this, you'll get the indicators, I believe, tomorrow. You'll get the indicators that you don't have, the multis and all that. And but the class itself will be on Saturday, November 23rd. And for the live trading part of it, and if the live trading will be just like this, I'll be on a microphone, I'll be in front of my 6 monitors, I'm going to be trading. Typically what happens during the live trading, like 95% of the time, probably more than that, we actually make enough money live trading with one lots to actually pay for the class. And so that's kind of a soft goal that I have while we're doing that, which is kind of fun. It also includes, and the live trading will be on Wednesday, December 4th, and then on Monday, December 9th. So we'll have some time to do some day trades and set up some swing positions, and then come back on the 9th and do some new trades. And in addition, on the last trading day of the year, I do what's called tax loss harvesting, which is a unique thing that only happens once a year, and you can get a free ticket to that. And that's great. And again, we've done that 10 years in a row, and every 10 years, it's made a ton of money. And then if you want to do the Elite package, it basically includes 2 days of additional trading on December 13th and December 16th. Again, some additional opportunities to continue to hone your trading skills. Okay. All right, so that's that. And then I'm happy to answer questions. We can come back here and kind of, if we come back and look at this NASDAQ trade. So, again, we got a nice move here from here to here, and that was very tradable. And then what I'll be talking about during the class is things like, okay, well, which time frames are important? If we're looking at the 30-minute chart here and there's a squeeze and it's yellow, what do we do with that, right? Or are we going to put more weight in the 4-hour chart? What's going on there? And if we look at the 4-hour chart, what's the story? Because it's green and there's a squeeze, but how much room do we give it? So that's kind of, and then, so there's a lot of really cool things here. And at the end of the day, it's just like, what are the ways that we can make money from this? And you'll notice from a 1-minute chart, 1-minute charts are hard because you're going to get you're going to get a lot of signals. It can be confusing, even though this is actually pretty handy for what I would call stock of the day moves, like something like Disney. I mean, this is what I used for Tesla. When you get a stock that's going crazy, if you look at this, it's like, okay, wow, we're just riding this up here. And, and you get an arrow, it's like, you got to kind of balance that out with, well, do we got green 10x bars? It's like, okay, well, great. Let's just kind of use this as a trailing stop, right? And so a few different things like that. But we're going to talk about that in depth on Saturday the 23rd, how to put together a complete trading plan using the 10x bars, using the arrows, using the multi-tools. We'll be doing individual stocks. Of course, a lot of heavy options on stocks, both directional as well as premium selling. And by the way, if you're newer to options, don't let that freak you out, because I do some pretty basic stuff. And then we'll look at futures and futures options too, where you can actually set up trades where you lock in a guaranteed profit. So if you lose, you make $200, and if you win, your potential profit is unlimited, especially like on these overnight moves and stuff like that. So anyway, it'll be a lot of it's gonna be a fun class there. Okay. Yeah. So if you guys have questions, you can simply give us a call. I know for people that already have the 10x bars. So the idea with this is you'll notice that, with this, if you already have the 10x bars, that's great. What this does, this includes the multi 10x bars with that multi-tool. So that's a new tool there. And then if you don't have those reversal arrows, that's also included here. In fact, this is kind of, for any class that we've done with indicators, like this is the most bang for the buck that we've ever thrown into the basic class. Usually with something like this, we would throw this into the pro class. But the idea is that since you guys already have the 10x bars, okay, since you already have the 10x bars, then you get it. I mean, frankly, you get a good deal because you've already got the 10x bars. Yeah, no, it's good. And then the classes are always fun. I mean, the thing I like about the classes is that they're very focused, very opportunistic, very much focused on money-making opportunities. No, so good question. So so right now they're definitely, especially the multi stuff, very heavy on Thinkorswim. We go through back and forth with other platforms, obviously TradeStation, Ninja, stuff like that too. We have found that, sometimes there may be challenges with that, but we do have people that are like, you know what, I love executing on, IB or Interactive Brokers or Fidelity. And what's great, of course, is with Thinkorswim, you can set up a free account. They don't charge you data feeds. They don't charge you any monthly fees. You can put in like $100 and get everything on the charting and still execute wherever you want. And then, yeah, if you do have any questions, I see some questions like, well, I've already got this. Your best bet is going to be to call or just email support at simplertrading.com, because I know there'll probably be a lot of unique situations there. And, obviously we want to help you out and get you taken care of. Yeah, so no, it's a good question. So for those of you that already have like some of our other multi-tools, for example, the multi-squeeze and the multi-EMA, guess what? This works great with that. So here's the multi-squeeze, multi-EMA cross, multi-squeeze. Guess what you can throw in right under that? You can throw the multi-10x right under that, and you pretty much, it's like you've got like a, control of an aircraft carrier at that point. Does it come with another bottle of wine from Becker Vineyards? I believe, Derek, for you, that would be included. Very good. Yeah, no, this is assuming that you have the 10x bar. So if you don't, again, you can give us a call and all that fun stuff. All right, guys. Well, I'm going to take a look here at the NASDAQ again, since that was kind of a fun trade. So what I was doing with that, a couple people asking about it. So 5-minute chart. This is the S&Ps. It obviously had a move here as well. Let me look at the bonds here too, because I was actually taking a look at those. A little bit of a buy arrow there on the bonds, but if we come back here to the NASDAQ, and who knows what's going to happen overnight or tomorrow, but what's nice about this is that, again, pretty good example of just kind of catching and allowing the market to give us what it wants to give. And I don't know what's going to happen here, right? I got my 10 contracts left, but I took the bulk of this off. And by the way, that is a specific money management technique that I use where I'll take off 3/4 of my position, the time frame that I'm using. I'll take off 3/4 of my position based on that shorter term arrow. And if there's a longer term one setting up, like right now we got a 4-hour squeeze and a 30-minute squeeze, then I'll let a smaller piece ride on that. Okay. And then there's some really cool things that you can do with buying futures options or, all kinds of stuff like that. But it's a lot of fun stuff. Basically, this will essentially set us up, and this is where I'm, with this class, basically outlining my entire trading plan for 2020. Excellent. Very good, Kevin. Yeah, so, well, let's do this. It's already 8:30. I mean, time flies when you're having fun. So what I'll do is I'm going to leave this, I'll leave this up here. And, again, we got some time. The class is not till the 23rd. But if you'd like to already start playing around with this tool, this multi-10x, multi-buy and sell arrow tool, you will, I believe, be able to get that like tomorrow or Friday. So you'll actually get it well before the class, which is great. Cool. All right, guys. Well, thank you very much. What I'm going to do is I'll leave this up here. And, again, if you'd like to sign up, if you just go here, you just got to type in to your browser, simplertrading.com/arrow. You'll come to this page, choose your own adventure. And then I look forward to working with you guys on the 23rd of November. All right. Cool. Awesome, guys. Have a great evening. And again, even if you just have the 10x bars, you're like, I don't want to buy anything. My hope is that you saw some cool things here that you can do and that you can look at, because I always like to, make sure that you want to, it's always kind of like finding ways to leverage the tools that you already have. And then if you are into those multiple time frames, which I'm a big believer of, I think you'll really enjoy this class as well. The tool, and then of course the class that talks about that. And it is a refining process. What'll happen with this, and a common question I'll get is like, oh my God, John, another freaking indicator. But what happens is that ideas beget more ideas. Like until you have the 10x bars, you don't know what you don't know. It's like, oh, here's the 10x bars. Great. Awesome. This is amazing. And it's like, wow, it would be cool to look at this on different time frames. Is that possible? Oh my God, look at this. And so, that's the only reason is to release something like that is something that improves, I mean, it's improving my life. It's just the idea of being able to make trades, more, it's just, you want to flow, like Bruce Lee says, you want to flow like water. And anytime we resist what the market is doing, or anytime we try to imprint our will on the markets, it always ends badly. And this is a tool that basically says loud and clear, stop that, just follow this. And if you're fighting it, it's pretty obvious. It's like, well, I just, like the NASDAQ, if I was still long my full position of the NASDAQ futures here, it wouldn't make any sense. It's like, oh, it told me to get out, so I got out. Great. And then, all right, guys, have a fantastic evening. And yeah, refresher on the 10x. Hopefully you guys are excited about this new tool that Eric kind of put together. I'm super excited about it. I think it'll be super helpful, especially for the market conditions that we have and that we're going to have, which we'll talk more about on Saturday the 23rd. You guys have a great night, and then see you guys at the next one.